Hi, welcome to the Market Alert for Wednesday, 27th of November 2019. This will be the last Market Alert for this week. The markets are really quiet. We've got half-day trading today. Markets are closed in the US tomorrow. Friday is half-day, and then everything back to normal on Monday. The US see Thanksgiving as a far bigger celebration than Christmas. So with that, I'm going to down tools just for a couple of days as the markets are quiet. Okay, so yesterday they were quiet, but I do love the sarcasm of this headline on the Zero Hedge website. Another deal is close. Yeah, always, as I've said in the Market Alert before, they are buying the rumor all the time, using this narrative to pump stocks to the upside. So this headline apparently sends stocks, bonds, dollar, yuan and gold all higher. Well, it wouldn't be good for gold. That's a certain, that would be a negative if a deal was done and the stock market continues to move to the upside. So again, it's an interesting thing to see that the gold market is actually rising when everything is supposed to be glorious and on the face of it. But you know that it's not at all. So yesterday we can see the Dow moving higher in the daily chart. So we have a new all-time high at 28,171, and market overnight sideways. But yesterday's main event, you can see prices moving higher in the pre-market session, trading down to the DP level and then moving back to the upside there. And you can see we've got the classic shakeout at the beginning, followed by the support coming in, and then the market moving to the upside, back above the 200 moving average, which becomes a support for the remainder of the session. And if it isn't a support for the session, then you will get a 76% retracement from this low to this high, and you'll see it there. So if the prices don't come back to the 200 MA, they'll come back to 76%. And then we see the obligatory rally to the close as well. Overnight, the market gapped slightly. You can see this here, but then filled the gap and is now moving back to the upside once more. And half day today, so the market will be free to trade to the upside with no issues unless something major comes out of nowhere. But otherwise, and it'll be the same for the electronic market tomorrow and also on Friday, where the market is likely to head towards the probably 28,500, if not higher, given the current market bias to the upside. No surprise there at all. The implied volatility also down. You can see this below the 20 MA in the volatility at 11.19 there, and pictorially you can also see that it's below the line there as well, just rounding over again at the moment, but very sideways. Like I say, for me this is a very interesting picture to see. This sort of coiling effect is indicative of a market exploding to the upside, which means that we could expect to see the stock prices move lower as well. But at the moment, it's a matter of keeping the illusion alive. And I know there's something wrong because the 3-month, 10-year yields are dropping. We peaked at 0.39 on the positive, 0.14 yesterday, but heading back towards what could be another inversion in this market, which spells problems, because if we go back to let me just see, September here, we've got September down at the bottom here, and this is when the repo market started, the overnight funding from the Fed, September the 11th, and has been in place ever since and growing by the day as well. Okay, it's only a loan, but they're up to something like 300 billion now supporting the banks. And it's interesting that the repo started when we got to 0.52 on the inversion there. So it's interesting to see. What this says to me is that the banks still have a major problem. What are they going to do when we go back to another inversion of the yield curve? And finally, Deutsche Bank sideways to lower at the moment for this market, not doing a lot, again in that coiling situation. So January could be a very interesting month if this all holds until then. And with that, I'll call it a day. Oh, actually, before I do that, let's just have a look at Bitcoin. Not a lot happening yesterday. And again, rounding over on the overnight. So let's have a look at the 4 hour. Again, you can see this rounding over of prices as they start to move lower, holding above the 20 bar moving average at the moment. Let's see if this holds. And intraday yesterday, a bit of volatility, but again, you can see how important the 200 MA is as prices came off this level during yesterday as prices moved lower. And at the moment, currently trading at this level as well, finding a bit of support, but it will need to close back above the 200 MA and the DP level in this chart. Okay, that will do it for this one. If there is anything to report, I will let you know. But otherwise, if any of viewers are from the US, have a great Thanksgiving, and I will see you in the next one. Thanks for watching.